Okay, welcome back. You got, 11 minutes to go for the pre-open session, and the implied open is 41 points higher. Anuj is here with a quick check on how he's looking at the trade setup. Anuj, good morning.
Morning, Prashant. Well, it's a bit of a make-or-break week for the market for a lot of reasons. For starters, it's the last week of the earnings season. I know a lot of backbenchers would come on 14th, but by the end of this week, most of the big numbers would have come out. The RBI monetary policy decision, of course, happens on Thursday, which is the weekly options expiry day as well. The dollar index has been stable, above 102, and Brent crude is back above 86. So I think that could be a bit of a negative for the market. And the US bond market clearly is indicating that the rate hikes are not done yet in the system. And perhaps that explains the recent FII selling that you have seen. It could be largely ETF driven. Also, the Nifty is at make or break level of the 20-day exponential moving average, because Friday's high, 19,538, was exactly that 20-day exponential moving average and the first resistance that we discussed. The other thing is that the earnings of the last few days have been quite poor. SBI's numbers clearly were disappointment. We saw that with Bank of Baroda as well, and Britannia's numbers as well, even though Britannia has already fallen ahead of the numbers. But even in the last leg of earnings season is not providing you with any kind of tailwind for the market. Quickly, let me come to the trading setup then. For whatever it's worth, on Friday, the Nifty made a higher high and a higher low. Even by 1 point, the high was higher than the previous day's high by just about 1 point. And the low was significantly higher, 19,296 versus 19,436. I think that, in a way, gives you a reference point to work with, higher high and higher low on Friday. Now, in terms of resistance, you're likely to open above the first resistance, which is 19,538, Friday's high, and the 20-day exponential moving average. I think the bigger resistance is 19,600, which is a 10-day exponential moving average, and also based on the options. The trend changes if you start to move above that. About 19,600, the texture will once again become buy on dips after the recent sell on rally move. And I say that because two stocks really made a big contribution on Friday, HDFC Bank and Reliance. These are the two top stocks in terms of weight and Nifty contribution. So if these two stocks start to move, I think the index will move. But let's see. The other thing is the broader market has been remarkably strong all through this while. So as such, there's no problem with the market. Let's see if we can take out 19,600 and trade above that, because that would bring in some positivity.